Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's time for another big picture update. We're going to cover Bitcoin's recent move, talk about the flow of money globally, US dollar interest rates, bonds, stock market, gold and silver, some capital controls, and tie that all back together with how money's going to flow into Bitcoin, then through alts, the more speculative things, meme coins, NFTs, and all that type of thing in the coming months. If the cycle is to hold true and repeat, as it certainly seems to be at the moment since we first put these projections on the chart back when Bitcoin was trading around $16,000. So obviously all the rage has been this talk about the Bitcoin ETF, and it really looks like that's on the horizon at any point now. So we've had a bit of toing and froing, some games being played, little things like Blackrock relisting the ticker, that IBTC looks like it's going to be the ticker in your trading account, or for TradingView if you're a chartist, but they pulled that yesterday after the pump, it's back there. So all these games that we know the big boys at Mission Control love to play, but I tweeted this out the other day and people have been talking about Larry Fink's flip from really hating on Bitcoin for years and years to calling it a flight to quality recently. And that really tells you that they've accumulated some Bitcoin, or they're in the process of, but they're definitely ready to profit off trading fees. And I don't think that they're going to let something like that launch and go down. We're going to have a look at what happened when the gold and silver ETFs launch, for example, and that type of thing. And this really opens the floodgates, if they can be first, for more ETFs. So they're going to make a lot of money here just off fees alone, but I think they're going to make more money in that year or two bull market cycle that we have ahead of us, when these other assets that we're going to talk about might not be doing so well. So just like in a crypto bear market where altcoin volumes go trading down, if stocks are doing relatively poorly with high interest rates and that type of thing, where are they going to get their trading volumes from and make their money? They're going to get behind crypto finally because they're ready to capitalize off it and they've got the infrastructure in place. So all these sort of things that make sense. In terms of the short-term moves, shout out to Kyle. He's recently joined us full-time and left some of his other commitments as our head of trading. And he absolutely nailed this move when he posted this on Sunday night when Bitcoin was thousands of dollars lower, talking about this run to $35,000 that's possible. So we had all these shorts that were going to be liquidated at 32, 33, 34, up to 35. And he outlined why that can serve as the fuel for a big short squeeze up to $35,000. And that's exactly what happened. So shout out to Kyle. He's been fantastic with all the shorter term TA stuff and altcoin trading stuff for those of you that follow him on YouTube or are members of our platform as well. So let's have a look. This is the best week and best day percentage-wise we've had in a long time. For those of you that are still watching videos and interested in crypto, it's been a pretty brutal 2 years and the longest bear market on record. So after a pump like this, it's pretty normal for people to expect a pullback. But I want to talk about that sentiment as well, because often I think a lot of people are still expecting that pullback. And if things like the ETF happen to get approved in the next couple of weeks, we can just continue to grind higher and leave a lot of the capital that's on the sidelines. A lot of smart people I talk to that are still cashed up or sitting in stable coins, a lot of people still talking about that $12,000 level and saying, oh, we can't possibly go up. Stocks are crashing, even though that correlation to me has broken. And every cycle, Bitcoin and crypto can have its different drivers, but particularly with the backdrop of high interest rates, things are different this time. And Bitcoin, almost as it matures, takes on a different meaning or a different type of asset class, from that speculative tech play all the way now to Larry Fink calling it a flight to quality, and global currencies being inflated away at a faster pace than ever. People are going to go, Bitcoin's inflation rate with the halving coming up and all that's 1% lower, that type of thing, compared to these 8% inflation rates we're seeing in other countries with that they're reporting. We know that real inflation is actually a lot higher than that a lot of the time. So yeah, overextended on the very short-term metrics, but that doesn't mean that we can't continue higher if there's a lot of money on the sidelines and people are getting excited about that ETF. And you had all the time in the world to buy crypto down here when no one was interested. And these are the ingredients that are required for markets to continue higher. But we're at a really important level now that monthly close here around 35,000. That's exactly where we've tagged. So to me, that's kind of the important level that we need to clear and get over. And hey, if we were to shoot up to somewhere like 45 in the next couple of months, get to the top of these Bollinger Bands, get overextended, and then have a pullback and retest, that's when alts can really fly, and ETH and that type of thing. So let's get back to those time cycles of mine where we've got the halving updates marked, the 4-year cycle of when Bitcoin tends to run and then go through its bear cycle and unwind. That's all marked on here. So as I mentioned over a year ago now, when we did these videos talking about the capitulation, and even earlier when ETH actually bottomed first, and I was speaking about how I think ETH can lead and outperform, I said, I don't think you're going to get another chance to buy ETH under 1,000. That was certainly the case now in hindsight, and that Bitcoin may have one more week lower because it's actually looking weaker than ETH relatively. And sure enough, we did have one more little week lower that got $1,000 or so lower than this first week that we had back in June, later on in November, and you had plenty of chance to accumulate there. So this was the projections we drew if cycles are to repeat, and again, having a crack at something like that 45 before the halving's on the cards, a bit of a pullback around that halving that tends to happen, and that's when alts can fly, and then Bitcoin can get into a huge bull market. Maybe we have lots of ETFs at that stage, all that type of thing, some easier conditions with all this capital that's on the sideline coming back into global markets and whatnot. So that's kind of what we're looking at now, big picture. Now, if we get a strong rejection and this all rolls over, a black swan happens, obviously we'll change our projections and anything's possible. But I really think that those ingredients of a lot of people in disbelief currently thinking, oh, we need a pullback. It just can't happen with inflation and interest rates and the global economy and all these reasons. And that's what you need. You need a lot of people not to be fully deployed and a lot of people not in the market to be the fuel for a rally as they get back in. So Bitcoin dominance, again, with the halvings marked here, we see it tends to rise in the bear market as altcoins are bleeding harder. So Bitcoin's dominance relatively is rising, chopping around through the halving. And so that's what we've had. Can it push a little bit higher? Maybe, but that's kind of what we're expecting now, to chop around a bit, give ETH and alts, as people get excited about crypto in general. They see their favorite alts that are down 95 to 99% still, starting to get on board those types of things as well. But Bitcoin has been outperforming compared to all those alts. All right, ETH. So in percentage terms, yeah, ETH did outperform off the bottom there. It's been just chopping sideways in a range, pretty lackluster. One thing that hasn't been spoken about a lot is the fact that ETH is the next most likely to get an ETF, and we've already seen those applications. So smaller market cap, a bit more of a, I guess, exciting technology in terms of people going, well, this is a bit of a tech play as well. I know AI is a backdrop. I actually think AI is going to tie into Bitcoin and all crypto in general in terms of a tailwind in this next market cycle. But we can easily see ETH pop and outperform percentage-wise. If we look at its chart versus Bitcoin, it's just been underperforming and bleeding out. And it kind of feels like we're in that capitulation now, oversold. RSI outside the Bollinger Bands, time for it to catch up as Bitcoin's really grabbed the spotlight with all this ETF news, but people are going to look, well, what comes next? The likely thing is an Ethereum ETF. If we're in a bull market, people think, well, ETH in percentage terms, all those things are going to come into it, and then that same thought process goes into all the altcoins. So let's have a look at total market cap of all crypto. We haven't seen a new breakout yet, so that tells us things like what Kyle was talking about before. Again, this is our 4-year time cycles, or when we'd expect altcoins to pop. I think we were around here last time I did the video, and I guess crypto in general has been performing well. If we take out Bitcoin though and look at total 2, we haven't really seen a lot of money coming into those altcoins. And if we look at total market cap 3 on TradingView, this takes out Bitcoin and Ethereum to have more of a look at just the altcoins. That's really still in that range, and it hasn't really got into even that first breakout or disbelief phase when people go, these alt rallies aren't real, they can't believe it, that type of thing. So there's still a bit of a ways to go there, and there's been no reason for fresh money to enter the altcoin market. It's really just rotation of money that was already in crypto and traders using that leverage to get the volume. It's not new money from new participants, and that's why we've seen things like meme coins pop off as traders take a bit of money from their stable coins, their Bitcoin or eStash, whatever, and rotate into these really small cap plays to get the big percentage moves. They have these huge prices and falsely inflated market caps, and then they give it all back because it's just a number on a screen. It's not real billions of dollars of value coming into these meme coins and really low cap coins. The final thing to look at here as well is another chart I like. So this is all the altcoins again, total 3, subtracting USDC and USDT. So take out the market cap of all the stable coins, and this is just the altcoin market cap. So again, it shows you that we've just been in this bleeding out stage, finally starting to turn up, maybe volumes picking up a little bit, and altcoins can be about to have their time in the sun after just been really beat up for a couple of years now. We have seen a few altcoins starting to outperform a little bit though. So anytime there's a coin, this is Chainlink with a big community, it's been around for years, there's people that are diehards that have been dollar cost averaging into it, it's got plenty of good news and developments and that type of thing. These are the ones that are going to break out first. And if you have a new coin, you need to build that new community and get new money interested and do good things fundamentally. Then the traders jump on board. All those things need to play out. So we have seen this for a few coins already. We're already seeing certain sectors that are outperforming well. People getting excited about the liquid staking derivatives of ETH now that we're at proof of stake. Layer 2s are all doing pretty well. I really like things like Thorchain, interoperability. Solana that was really beat up. A lot of people are still big on that, them and their community. And then we see, I guess, old favorites. If we get into a new bull market, lending is going to come back with things like Aave. If Binance is the largest exchange by trading volume, BNB is going to do well. A lot of the gaming coins have been doing really well. Something like DYDX has made a big move for their new perps. So projects that are doing new exciting things and been really busy building, they're the ones that we're focused on with our research and that you should be too. Obviously, if you want our premium research, you can join our platform, and the team are doing a fantastic job there. And then after altcoins have their time in the sun, I think that's when we'll finally see NFTs run again. Blue chip NFTs, old favorites, those would be communities. They're the ones that are going to bounce back really well. All the others are just going to be like 2014 and 15 altcoins that never returned, or 2017 bull market, a lot of those altcoins never returned. So there's just so many out there now. So be really particular. Things that we've covered, like World of Women and that type of thing, are some of our favorites in terms of our NFT focus researched. All right, let's talk about some of this macro stuff. So as I mentioned before, a lot of people that I speak to in the crypto world are on the sidelines with their capital. But this is the same for global markets. So more than 5-6 trillion estimates are in these money markets accounts that are now getting that 5%, 6%, 7%, depends if they're sophisticated investors that can buy those bonds or they're just sitting in that cash account and that type of thing. So I know times are tough out there for the average person on the street, but don't forget the wealthy being pinched and being 8 to 10% worse off each year because of inflation. They don't even notice it because they've got so much money. And because they can pull that out of stocks or sell a couple of properties, whatever it is, there's huge amounts of capital that are ready to be redeployed. And if Bitcoin, gold and silver, even, which we'll get to, are seen as the now favorable asset classes, along with things like bonds, or once markets feel that interest rates have peaked and inflation is going to finally come down a bit, that rotation out of all that money that's in bonds and savings accounts, even if it's just relatively a little bit, this is trillions of dollars being injected back into markets. This is the US dollar DXY. It had that absolute tear, a relatively big bleed, and now we're having a bit of a bounce. So I think we can have possibly another leg up here. We're starting to see things like capital controls in other countries, inflation a lot worse relative to the US. So if those conditions stay that way, and the US economy looks like it's recovering the best, then the US dollar is going to continue to strengthen. We've seen inflation higher in Europe. Here in Australia, they haven't raised interest rates as high, so it's less attractive for capital to come here. all those types of things. This is the US 10-year. It's got up towards 5%. These are the attractive rates that we have been talking about in these videos and the ones with Martin, that type of thing. It's only back in 2020 when you're at basically 0% or you couldn't get any interest on your savings or in bond markets. And this is this big rotation of capital. A lot of global assets haven't been repriced yet still, things like commercial real estate. But on the flip side, we've actually seen a lot of real estate in general, housing markets here rebound. Now, this is for different reasons. Different countries have different rules and settings around their mortgage rates and fixed interest rates. In Australia, we've seen things like record immigration that's soaking up that capacity that would otherwise in a free market, I guess, or all else remaining equal, people would be selling their houses and house prices would be coming down and that type of thing. But when you have hundreds of thousands of people coming in each year, government policies are, I guess, changing the dynamic so that house prices are remaining stubbornly high, even with interest rate settings going up the fastest we've seen in decades. This is just another thing I wanted to mention. So this is the Chinese yuan versus the US dollar. It's been bleeding during that period. That the US dollar's been strong, but in the past, whenever there was any type of capital controls and people trying to get money out of China, and obviously they're pretty strict with that type of thing, they want money to remain in the country, in their economy, and in their currency. So some of these reports suggesting that there's 5 billion trying to exit, the worst in several years. And so back in 2016, these Chinese capital flight was one of the things that really drove that bull market, and a lot of people going, oh, well, I can buy $1 million worth of crypto and send that overseas, and it avoids these capital controls in the Chinese banks. So this is another thing, again, when a broader thesis I've been talking about is how the East and these other emerging markets and countries can really drive this crypto cycle as we get into the full swing. I think we'll see others join El Salvador in making Bitcoin legal tender. All those things that people aren't really thinking about now can be the next chapters of this next bull market cycle. The other thing that I want to mention there was that is along hand in hand with the fact that we're going to get that Bitcoin ETF in the US. So that's when we can get that kind of blow off super cycle. We've got all these ETFs coming on board, multiple Bitcoin ones, Ethereum ones, altcoin ETFs, that type of thing as we get into the bull market. And then we have all these other countries and it becomes a global phenomenon. And that's when we get the big blow off bubble, let's say a year, 18 months, 2 years out from now in the crypto market. Okay, so quickly, just looking at stocks, they've been underperforming Bitcoin. Bitcoin's been the best performing asset year to date. There's still that money on the sidelines. There's still all that money that's been printed, remember. So people talk about all-time highs, but it's a relative thing. If 4,800 was the all-time high on the S&P 500, but now you've printed $5 trillion more dollars and increased the currency supply in the US by 25-30%, if the same proportion of money goes back into stocks, then the stock market can be 25 to 30% higher. And it's, again, all things remaining equal, it's just getting back to the same amount relative being put into the stock market. So for those reasons, it doesn't surprise me that we're still relatively high, even though if you hadn't have done that, sure, stocks would be a lot lower. It's the same with the immigration policies in these countries and housing that we just spoke about. There's things at work that change the underlyings that you have to look at rather than just looking at a number on a screen and going, oh, stocks are back near record highs. How can that be with interest rates high? Well, it's all these other things that are coming into play. Tech stocks, they've been performing a little bit better. We've spoken about how those big handful of tech stocks, 5 to 7, depending on how you group them, continue to swell in terms of their dominance in things like the S&P 500, the NASDAQ. And if you look at it overall, the vast majority, 490 odd companies in the S&P 500 are underperforming in bear markets year to date and that type of thing. That's all on stocks. Let's have a quick look at oil. This is another thing that can really change global economies. And if you talk about crypto being crazy, don't forget back here in April 2020, oil went to negative $40 a barrel and has ripped all the way back up to nearly 120 plus here. So high oil prices, that can be that another factor that perpetuates inflation continuing. High input costs, farmers have to put up prices, transport, people driving for personal use. So all those things feed into having less money in your hip pocket for the average user, the average individual on the street, lower middle class people. But remember, the big corporates just put up their prices of their products. And that can drive that inflation, which just drives inequality. I think that's the end result of everything we're seeing. It's just much higher inequality. We've spoken about that at length in the videos with Martin. Some charts that have amazing setup. So gold and silver. Now here is when the gold ETF was launched back in March 2003. Wouldn't we love if Bitcoin did a similar thing? Opens the floodgates for a lot of money to come into something that was otherwise, I guess, seen by traditional investors as still hard to sign up to an exchange. KYC, they hear about these exchanges blowing up. All those things are no longer a worry for those people that have got their trading, a brokerage or bank account where they can invest in stocks and ETFs. It's now just the click of a button away. So huge move from gold there, going from $300 to $2,000 in those years after the ETF launched. And obviously Bitcoin and crypto moves a lot faster than gold in traditional markets, trading 7 days a week, 24 hours. The excitement, the news cycle on Twitter. So something that took 10 years can easily happen in 2 years in the crypto world. Really coiling up. We've had 3 years now of sideways action, a couple of tests here, and I think that things are lining up. If inflation continues, money printing, it's just a matter of which country and currency is printing the most at what time. All these things are really, really favorable for gold, as well as that, I guess, industrial component as well. More and more semiconductors, computers, solar panels, cars, all those things that require gold, silver, and so on. Silver, a little bit like an Ethereum or an altcoin play relative to gold. It lags behind and then has these volatile moves to catch up, as we've seen in the past. And this was when we saw the silver ETF launched 3 years after the gold one in April 2006. So again, if a lot here mirroring what I think we're going to see in crypto, with maybe an ETH ETF getting launched, let's say 6 months or a year after the Bitcoin one. When we break out of this downtrend, silver can fly. I really think this is a market that's been somewhat manipulated and suppressed when you see the percentage of paper contracts that are traded versus real silver and settled. And as we go into this, I think commodities boom, and you're going to need real silver, real gold. Even things like blockchain verification, we see more assets, real world assets move on chain, countries distrusting each other more. Or have you got that amount of gold or silver or oil? All these things are going to play really favorably, I think, for commodities. I've already touched on that housing market slide. Isn't it crazy that we are seeing house prices back at record highs in the US and nearly there in Australia? Mortgage rates in America now 8%, and a lot of people rolling over their fixed ones in Australia now. But it doesn't seem to be hurting the housing market in general because there's wealthy investors out there and there's that high rate of immigration. But guys, that's everything for today. If you want all our premium research, fundamental analysis, and technical analysis, the team's been doing an amazing job. We're still offering that lifetime special as we did back in 2017, which was really popular. And we'll obviously be capping that as we get into the bull market, just like we did back then. So head over to nuggetsnews.com.au for all that info on how to sign up. Otherwise, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.